According to Al Jazeera, a political story unfolding in the United Kingdom could have outsized implications for Palantir Technologies and, by extension, for investors trying to understand the company's long-term risk and opportunity profile. According to Al Jazeera News, the key development is that Andy Burnham, longtime Labour figure and former mayor of Greater Manchester, is expected to become the next UK Prime Minister as early as mid-July, and one of his first major decisions will touch directly on Palantir's flagship UK healthcare contract. Al Jazeera mentions that NHS England currently has a 7-year, roughly £300+ million contract with Palantir for the Federated Data Platform, built on Palantir's Foundry software. For stock investors, this contract is symbolically and strategically important. It anchors Palantir deeply inside the UK's health system, provides recurring revenue, and serves as a reference customer for other governments. From an equity perspective, the news raises a central question. Does a Burnham government represent a structural headwind for Palantir's UK public sector growth, or simply a bout of headline risk that will moderate over time? To unpack that, it helps to separate the story into several layers: Palantir's UK footprint, Burnham's track record and stated priorities, the political narrative around US tech vendors in public services, and the specific contract mechanics that could influence the company's medium-term revenue visibility. According to Al Jazeera, Palantir has spent roughly 6 years embedding itself across multiple UK public bodies: the National Health Service, the Ministry of Defence, the Home Office, and the Financial Conduct Authority. That matches the investment case many shareholders have embraced, that Palantir's long sales cycles can yield durable, system-level integrations that competitors struggle to displace once established. However, Al Jazeera notes a sharp contrast between that expansion and Andy Burnham's regional record. In his 9 years as mayor of Greater Manchester, his administration did not issue contracts to Palantir, and Greater Manchester Police confirmed no Palantir contracts over the past several years. For investors, this is a data point suggesting that Burnham is at least comfortable operating large public systems without Palantir's platforms. More importantly, the article highlights what is often called the Manchester precedent. Rather than adopting the NHS England mandated Federated Data Platform model using Palantir's Foundry, Greater Manchester's health leadership chose to build their own analytics infrastructure over several years. Supporters of this approach now tout it as proof that robust, clinically useful data integration in the NHS does not inherently require Palantir. From a market perspective, that precedent matters in 2 ways. First, it provides a ready-made political and technical argument for any government that wants to reduce Palantir dependence without appearing to be anti-data or anti-technology. Second, it offers an implicit blueprint for domestic or European vendors who may pitch themselves as more politically palatable alternatives. According to Al Jazeera, Burnham's team has not publicly committed to any specific move on Palantir, and his spokesperson emphasized generic procurement principles, value for money, data safeguarding, and protection of British interests. Superficially, those sound like standard civil service talking points, but in this context they hint at a preference for British-based suppliers and stricter scrutiny of US defense-linked technology firms. The report also references briefings to the Financial Times, describing how Burnham's advisors, including former Tech Minister Josh Simons, are collaborating with researchers Antonio Weiss and Martha Dacombe on a new AI strategy that would prioritize British companies and workers. For Palantir shareholders, that framing is notable. It suggests that what is at stake is not just a single contract but a possible reorientation of UK digital policy towards domestic providers, which could slow or cap Palantir's government growth trajectory in the country. Investors should think in terms of scenarios rather than certainties. In an optimistic scenario for Palantir, Burnham's government conducts a high-profile review, demands stronger guarantees on data security and public value, possibly squeezes pricing, but ultimately keeps Palantir in place for the bulk of its NHS and wider government workloads. Under this outcome, the market might initially punish the stock on fear of contract loss, then gradually re-rate upward once continuity is signaled. In a more cautious scenario, the government uses the break clauses and forthcoming decision points to progressively reduce Palantir's footprint, either by limiting scope, encouraging competition, or favoring mixed environments where UK suppliers handle politically sensitive functions and Palantir is restricted to narrower, less strategic roles. That would not necessarily trigger an immediate revenue cliff, but it could cap long-term wallet share in the UK and undermine the company's narrative about expanding its mission-critical role in allied governments. The most bearish scenario would involve a deliberate political choice to phase out Palantir entirely from the NHS Federated Data Platform and potentially other departments, invoking security, sovereignty, or value for money arguments. Such a decision would likely unfold over several years, but markets tend to discount future revenue streams quickly once credible policy intent is established. Now, How probable is each path? The article provides several clues. First, the political optics. Al Jazeera notes concerns within Burnham's camp that what they call unfettered tech boosterism risks alienating voters who already feel uneasy about the extent to which the British state operates on American software. In electoral terms, taking a visibly tougher line on a high-profile U.S. defense-linked company like Palantir is low-cost politics. It signals sovereignty, caution on data privacy, and support for domestic tech, without necessarily cutting services. Second, there is a values argument. The piece quotes Duncan McCann of the Good Law Project, who stresses that a defense-focused company may not share the same values as a healthcare institution like the NHS. Whether or not investors agree with that critique, it is influential in shaping the public narrative. It also underpins activist legal challenges that seek greater transparency and potentially place friction around contract renewals or extensions. Third, the governance angle. The NHS Federated Data Platform contract has a break clause that kicks in during March 2027, but the article notes that a decision on its future needs to be made by December of this year. That compressed timeline matters. The Burnham government taking office in July faces immediate pressure to define a stance by year-end. For markets, this sets up a clear catalyst window in the near term, when investors will get either reassurance or a signal of strategic retreat. According to Al Jazeera News, Burnham has already signaled, in his first major speech back in Westminster, that he wants social value to carry more weight in procurement. This extends beyond pure cost or technical merit to include broader economic and societal impacts. For Palantir, a US-based company with strong defense and intelligence roots, scoring highly on such criteria in direct competition with UK-based alternatives could be challenging. On the other hand, Palantir's defenders would argue that its platforms deliver operational efficiencies, improved care coordination, and better resource allocation, all of which generate significant social value in their own right. For investors tracking the story, one key question is whether Palantir can quantify and communicate those benefits convincingly enough to offset the political tilt towards domestically owned providers. The article also brings in a parallel but related case, Palantir's clash with London Mayor Sadiq Khan over a planned Metropolitan Police contract. According to Al Jazeera, Palantir launched a high court challenge after Khan blocked a major policing deal, framing the decision as an attack on free speech. Khan's office later approved a smaller arrangement, but the dispute highlighted a deeper tension between the company and some parts of the UK political and civic ecosystem. From a stock perspective, the London episode shows that resistance is not hypothetical. Local and regional authorities are willing to absorb legal friction to curb Palantir's role in sensitive areas like policing and surveillance. Andy Burnham, coming from a city regional governance background and sensitive to public sentiment on rights and data, may be more culturally aligned with that cautious stance than with the previous government's more enthusiastic embrace of US AI vendors. Investors should also consider the signaling effect beyond the UK. Many governments watch each other closely when dealing with large, controversial technology vendors. If a major Western democracy were to significantly reduce or rescope its relationship with Palantir in health and policing, other jurisdictions might feel emboldened to push for tougher terms or alternative suppliers. Conversely, if Palantir successfully navigates this scrutiny and retains its contracts on credible value for money grounds, that could strengthen its case globally. One nuance worth emphasizing is that the article does not present Burnham as ideologically opposed to AI or data analytics. His team is developing an AI strategy. They just want to orient it around British companies and domestic employment. That suggests that the total addressable market for data and AI in UK public services is not shrinking. The contest is over who captures it. For Palantir shareholders, the key is to judge whether Palantir can reposition itself not merely as a US defense contractor exporting tools, but as an indispensable partner embedded in the fabric of UK public services, transferring skills, fostering local ecosystems, and aligning with national policy goals. In terms of investing implications, there are several angles to monitor over the coming months. First, contract disclosures. While the NHS Federated Data Platform details are not fully transparent, any indication of renegotiation, scope change, or formal reviews initiated by the new government will be crucial signals. Management commentary on earnings calls about UK public sector pipelines will need to be parsed carefully for tone and specificity. Second, reputational risk. The more Palantir is publicly portrayed as a security risk or as misaligned with UK values, the more difficult it becomes for civil servants and politicians to defend renewing or expanding its contracts, even if they see technical merit. Investor confidence is often sensitive to reputational overhang in government-facing technology names, especially where decision cycles are political as much as commercial. Third, competitive dynamics. If the Burnham administration actively champions homegrown data platforms, investors need to assess which UK or European firms stand to benefit, and whether Palantir can position itself as an orchestrator or integrator sitting above a more domestically flavored stack, rather than as a monolithic, all-in-one solution. Fourth, legal landscape. Groups like the Good Law Project are already litigating and campaigning for greater transparency. Legal and procedural friction can drag out decision timelines, introduce delays in revenue recognition, and add to compliance costs. Palantir is accustomed to operating in contentious environments, but each jurisdiction imposes unique legal burdens that investors should factor into margins and growth pacing. In summary, according to Al Jazeera, Andy Burnham's rise and the looming decision on the NHS Palantir contract transform what might otherwise be a routine procurement issue into a strategic inflection point for the company's UK story. From a risk-reward standpoint, the situation mixes political risk, contract concentration risk, and reputational risk, but also offers a test of Palantir's ability to prove irreplaceable value under adversarial scrutiny. Long-term investors may view volatility around headlines as an opportunity if they believe the platform's technical moat and embedded use cases are strong enough to withstand shifting political winds. More cautious holders may see this as a signal to reduce exposure to a name whose government growth hinges on inherently political decisions. Either way, the coming months in London and Manchester will be important for anyone tracking Palantir's path from controversial defense contractor to mainstream, multi-sector data infrastructure provider. According to Al Jazeera News, the decision deadline on the NHS break clause sits at the end of this year, while the formal break point is in early 2027. For investors and market watchers, that means the near-term narrative will be shaped less by quarterly financial performance and more by policy pronouncements, reviews, and political messaging from Downing Street. As always, this discussion is for informational purposes only and does not constitute investment advice. Listeners should conduct their own research and consider their individual risk tolerance before making any trading or investment decisions. Thanks for listening to this episode. If you found this analysis useful, consider subscribing and sharing the podcast so you do not miss future deep dives into market-moving tech and policy stories.